All right. Hello, Mish. Happy Monday. I have some good news and some bad news. And the bad news is I don't really know what we should discuss today, but um the and this market is crazy. Look at these RSPs, right? This is the equal weighted S&P, and the Qs today were new highs. I mean, I bought Google today. I didn't just buy Google. I bought calls in Google, and I saw this at the end of the day, and I was thinking, whoa, I didn't see that coming. What do you think?
Well, first of all, I think maybe you feel emboldened because yesterday was your birthday.
Oh, come on.
But
At my age, that doesn't make anybody feel better.
no, seriously, what I think is that I kind of came into this week writing last week about the fact that these growth stocks are on a tear again after having a bit of a rest, with a lot of enthusiasm about a broadening out of the market. And then boom, the market started going down in the Dow and the transportation and the Russells, even the retail skidded a little bit, but not too badly, thank goodness. Regional banks, it all went down except for growth. So I'm thinking to myself, oh God, here we are back into the safety play again. So to me, this really needs to reconcile. Otherwise, your buy of Google could be very short-lived. But I know that you're doing this for very different reasons than the way I'm looking at the market. So maybe tell us why you bought Google and how you bought it.
Okay, so first of all, I think the answer is here in this MAGS ETF. So the MAGS ETF is the MAG 7 wrapped up into this one ETF. And when I say the answer is here, this is what's going on in the market right now in the last 2 weeks. So my feeling is that there's a number of different ways you can play this market, but it's not often that you have this kind of momentum in the market so easily defined. And so the reason that I bought Google today is, first of all, short term, and it is a momentum um, setup. We have a huge explosion outside and above a major top on what I see as extremely significant news. So this came on their quantum computing news. So either that's a blow off or it could be the beginning of a move nobody's expecting. And so here's the setup. When you break out of a daily level that's this strong, and I can line it up with a really tight stop on the opening range and the low of the day, then this is if it runs, I'm going to follow it. If it pulls back under this high in a meaningful way, I'm out. And the reason to do this is because it's a very specific momentum situation and because the time of year. And this is how I would play going into the end of the year. If everybody's going to chase to make up for it, what are they going to be in? Are they doing it? And so I think that that's happening in Google. And I'm going to Apple right now because this is an example of having done the same thing. Because I know some people can get scared buying new highs, and you should get scared if you don't know how to do it. So when Apple was taking out this level, there was one day of consolidation. And when things are really strong, they don't sit around and wait for a correction, right? This is what catches people off guard. One day of a correction, breakout. I missed that breakout. I had to buy it the next day. So now it's really beginning to feel like, whoa, where are you going? But I'm still not that far from this high, and that's my defined risk. So when it gets up here, 3 more days of consolidation. Okay. Well, what are you supposed to do with that? Buy more, of course. So I bought more there. Again, these is all with options. So I'm not just buying, I'm leveraging up into this. Now, keep I know this isn't exactly your cup of tea, but that's my point. I'm saying what we're doing, and I know you're probably
Hyperventilating
going to
and I
say the
didn't
same
even do
thing.
it. But go ahead.
I have my risk levels at each one of these points are a significant daily level and the opening range. And so I can get out just as quickly as I'm getting in. But if you want to catch something that's going like this, you only need to catch one or two of these every once in a while, and it's a monster move. And so I'll shut up in just 1 second after I'll say I missed Tesla. Sorry. And let me get rid of these. And Tesla, the stock, aside, but the point is, this is the same idea. It explodes, it consolidates quickly. And when these things explode, they don't wait for you. And that's what you're trying to get. And the pattern that I'm constantly emphasizing in Wednesday mentoring is if you catch something that's really strong, here's all you have to do. Look at yesterday's low. And as long as you are trading over yesterday's low, once this broke out here, didn't trade lower, 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 didn't trade lower. When you get one of these, I'm not even going to show you if you look at that in App Lovin from 80 to like 120. So that's one way. If this is Christmas, the Christmas rally only comes around once in a while, and when it's this strong, I'm playing it.
Well, you said a couple of things there that I think are really important to note. Number one is you're trading very actively and you're leveraging, so you really have to be paying attention, right? So that's two things that I can't always guarantee that I'm going to be able to do is play it so tight unless I predetermine my stops. So, as people are listening to us, you have to realize that Jeff has the ability, and it's rare because he's a guy, to multitask, do all the things he's doing, and then also be able to play a momentum trade like this, which is scary to somebody like me for sure. And then yet also be able to watch it out of the corner of his eye to make sure that if it starts to roll over, if it takes out the low, he's gone. So you've got to, if you're really going to play this sort of game, and unless you're looking at and you just think that Tesla or Google, you don't mind sitting through a correction, which I don't think is really our MO necessarily. We try to avoid getting in right before the correction.
Oh, don't do that.
Yeah, right. Really what you're saying is as you're getting this on a day trading time frame with such a tight stop, and you don't have to do it with 50 million stocks, you can do it with one or two. It's a great way to take advantage of a unique time right now, which is obviously December and people are waiting for the Santa rally. And of course, in this case, it's rally. Now, I'm very different. So, what I wanted to tell people here who are listening to us is how fortunate they are, and I am, by the way, not just you all, but I am, that I could have been sort of your partner, not sort of, I am your partner for 35 years. We probably shouldn't say how long. But and we use the exact same tools. We're both looking at opening range. We're both looking at momentum. We're both looking at leadership. We're both looking at chart patterns. We're looking at all of that. And yet we have such two completely different styles, and they're both okay. So for me, watching you, I'm in awe. I mean, I'm in awe, and sometimes I actually will look at these charts and go, Jeff can do it, why can't I? And I think it's really important to understand who you are as a trader. I just can't. Now, I happen to love Tesla, by the way. This is where I'm good. I told people to buy Tesla at 200 and 250 and said it was going to go to 350, 400. And of course, it has beyond. So that's my game. So I thought it would be good, since we're talking about what do you do as we're ending the year. If you really feel compelled to do something, you can either do exactly what you just said, which is really find the things with momentum and day trade them and time your way in and even leverage it. So it not only shortens the time frame a little bit, but you make more bang for the buck, or you can do what I do. So let's kind of talk about what I do for a living. Let's put up Rivian.
Yeah, that's a great one. Oops.
So I don't think that anybody who follows us is going to be surprised that we've been talking about Rivian. I've been writing about Rivian. I went on Charles Payne and talked about Rivian. You and I talked about Rivian last week, this massive breakout. And if I were Jeff, I'd probably first be buying it today.
I was looking at it today actually, and I just had my hands full, but I'll tell you where I'm going to buy it after you're done.
Well, and certainly you buying it today was the legitimate thing. What I did today was add to my already existing position, okay? So this is what I'm doing now, is I'm either adding to positions that I've been in because I have found them to be basing out, and now they're breaking out of the base, but I already have a core position, or I'm putting on a core position to things that I think, A, have a low risk, but going into 2025, if they play out and they pass the muster of the calendar range and all of that, I will add. So I wanted to show Rivian because, when I saw it was basing out there around that 10, and as soon as it went through its recuperation phase, not the first time because it didn't confirm the first time, but the second time, yeah, right
Yeah,
there,
yeah. So
right? This,
here's the
that's
coming.
when I started buying.
Yeah,
That's when I started
yeah,
buying. Then I even added to that when it then confirmed in the accumulation phase, which is over the 200-day moving average. I added. And
yeah.
then I sat. Okay, I sat. I didn't do anything after that. I wasn't certainly thinking about taking a profit. Mostly I was thinking, okay, where, Mish, would you be wrong? And my initial thought was I'd be wrong under the 50-day moving average and I would just get out and that would be the end of it. Now that it's up here, there's two thoughts. Number one is adding today like I did, but now that I've added, now I have to change my risk parameter. And so I just raised the risk on all of that to under 14. So my average price is probably around 14. And so if it breaks 14, it's basically a scratch and I'm gone. If it doesn't break 14, now I've got pretty much it, and I'll probably just sit tight with it until 2025. So that's one I wanted to show you. And that's kind of different because I'm still watching it, but I'm not micromanaging it because I'm not afraid. So let's go to Stratasys, which is another one you and I talked about last week, SSYS. So I also had bought this stock last week, pretty much right after Jeff and I talked about how, and when Jeff got excited about this, see, here's what's so great about talking to somebody who's a momentum trader when I'm more of a like, let's wait for things to base out and get in while it's still basing, is if a momentum trader gets excited about what you're doing, that's a good thing.
Yeah, watch out.
Right. And you were in my head today, Jeff, when I added to this, you were in my head. So I got in. My average price on this one is probably around 10. It's not like I had the wherewithal to buy it sooner because this is one of those crap stocks in terms of the earnings, in the non-mag 493 as opposed to the mag 7. So it wasn't like I was having a big, really much interest in this, but I read recently, and we talked about this, that NASCAR just made a deal with them and they are now making all the parts for NASCAR cars. They're 3D printing the parts, which is, if you're driving a race car, one of the major things you need is for the car to be light so it goes faster. So I thought, okay, that's NASCAR. I mean, that's kind of huge, right? So I got in. Now, I saw what happened on Friday. Look at that major reversal. So I knew I wanted to buy more, but I didn't think I was going to do it today. But I was compelled to do it because look how it held that 10-day moving average. And then when it took out after opening up lower than Friday's low, it went back over the low. And then it had a legitimate 30-minute opening range breakout with positive pivots. That's when I added. So this is another thing you can do. But why am I doing this? Why? Because I think if these are the stocks like a Rivian, like a Stratasys, 3D printing, that have been so forgotten about in 2024, come into play in 2025, I've already got a good position. I've actually got the fund in this one, both of them actually. I've already got a good position. And now I'm in a situation where I've got such a good core. If I want to kind of play in your universe of Momo, I can have some fun in day trade because now I'm playing with house money, so to speak.
Yeah, so I looked at this after we talked the next day really closely. and to this conversation, um, I thought, you know what, if it gets a little bit more demonstration that it's breaking out, then I'll chase it there. And the only reason not to do it last week was this market is on fire at the top. Exactly what I just said. And I know for myself that I am a much better trader when I am focused on a particular way of looking at the market and a particular trade. And and that includes, like, it takes a different mindset to trade a base as it does to trade, Google breaking out completely overextended. It's a different mindset. And I we are lucky that we can do our jobs and look at the screen and but it it does I don't spend all day looking at the markets. I put in my stop. I need to make a quick decision, move on to the next thing. And so I actually like what this play right here, because I feel like it's demonstrated the momentum, pulls back. So if I was going to play this quickly, it would exactly be what you did. It didn't fall apart here after the head fake, and now it should come right back. I could put a tight stop here and go to sleep on this. But the only reason I'm not going to do it is because I have my hands full being long the Qs, Google, Apple. I bought IWM today, as I said to you, thinking it was turning around, but that thing's just not doing its job. And so I'm going to focus on that play for this year, for the momentum right now, and then come January, all all bets are off in terms of what the market's going to do. We can use the January trend trade and start catching some stuff that's going to last for months. But
And assuming that I have money in both of these trades, when we get into January and the calendar range resets, if they do not take out the January calendar range high, I probably will be gone. And, that's where I go from, I'm trying to stick with this thing longer term. But again, I'm using the market gauge tools to make sure that I don't take a winner and turn it into a loser. And I mean, and that's really the moral of this story, right? Is that you can become a specialist in something that you enjoy doing, use the exact same tools, the exact same philosophy, the exact same, really basically mindset in terms of opening ranges and moving averages and phases and momentum, and be a completely different kind of trader. And they both can work out. I mean, Rivian was up 7% today, which I think was way more than Google was up. Correct me if I'm wrong, but so I was happy from a percentage standpoint.
so you're touching on something that I was touching on in webinar last week, and I'm going to be talking about it through the end of the year. And that is, and actually, before I say it, let's look at Rivian for a second. Because as I said, I was going to buy Rivian today, for all the same reasons that you said you were going to buy it, or did buy it, or were adding. When it broke this, I just know this is around the 14 level, because I was looking at it. Or no, this is the 14 level, somewhere in here. But one of my favorite trades is actually when I miss it. And you might have heard me say that about Google. I just showed you Apple. I missed Apple, but then I got in. So here's the missed it trade. When this blows up like this, I missed it, right? I would much prefer to have bought it down here. But what it did is it proves that the momentum, that my base case is right. And that what we're talking about here is we both have our base case and we understand what the market should be doing, and we're trading that. We're using the same tools and indicators and even to some extent the same strategies, but we're applying it to a market condition that we understand. And ultimately, what we're doing is managing our risk. And so, my message to people through the end of the year into next year with some special mentoring opportunities is this: indicators aren't going to make you a successful trader. Strategy isn't going to make you a successful trader. Patterns isn't going to make you a successful trader. None of that will really matter. It'll be a temporary band-aid on a frustrating trading career unless you understand how to take all that and play the game of managing risk. And when you view those as tools to what you're really doing, then you'll become a successful trader. And I said this in the webinar, I will admit I'm as guilty as the next guy selling something at telling you that if you buy this strategy, it's what you need to succeed. But when we do that, we're also telling you you're going to use this strategy to manage your risk, and this is how you're going to use it. Um, but I don't think people really understand that it's the managing the risk that we're doing here, and that's why we can be trading two totally different ways. So as it pertains to Rivian, I missed it. So tomorrow, 15 is the pivot, is a huge pivot point going back. I won't take us longer into conversation. The floor trader pivot on this thing is probably right under 15. If we get an opening range reversal in and around that level, I can load up right here with a stop under 14 with options. And if this thing goes to 20 with a delta 30, the options will probably be 5 to 10x. And I'll put my stop under 14.
Perfect.
That's it.
Yeah, and this is a stock that can get there very quickly because, as we know, it may not be Tesla, but it has a tremendous history of volatility.
But it's lining up for a breakout. The only thing going against this thing for that it going to 20 right now in my mind is that it's it's in the group of stocks that's slow right now.
Mhm.
And that is like nothing against this stock. It's just like the hot money. Where's the hot money right now? It's all doing something stupid in Tesla, Google, and all these stuff that's good to getting their head blown off. But
This
this
does
could
have some
totally
nice,
catch on fire.
yeah, and it had, by the way, I think in Car and Driver, I don't know, all those car magazines, they all have names that sound the same to me. But I did read about this Rivian in Car and Driver, and man, oh man, that they give it a great review. So um, the street agrees that this is an up and coming company based on the monies they've gotten, the deal they made with Volkswagen. They're working on a lower price pickup truck that's smaller, and they have models going in for a sedan. And they're also, by the way, their battery can be used on their Tesla supercharge stations. So there you go.
Oh, it's definitely a hot car, for sure.
People love it. I mean, they love
Yeah.
it. They say the mechanics of the car is fantastic. So
Yeah, I've never driven one, but I
me
know.
neither, but I'd love
Uh,
to.
yeah, yeah. So, all right, I may have just. Well, that's my plan for Rivian since I missed it today.
Well,
So,
so I think we just said a lot and we gave a lot. I don't know if we have anything more to add. I mean, you can look at things different ways, but using the same tools, always with the idea of risk management. And if you do happen to get fortunate and buy something that's basing out and then it goes into momentum, at another time, adding to the position, which is a much more sophisticated thing to do, is a topic we can discuss in the future because there are definitely strategies for that.
oh, the best time to talk about that is when we get to January, right? January trend trade tells you what's getting started, and then whatever gets started, keeps going. And
I hope we're talking
2025 is
about
going to be a
this.
good year.
All right. That's right, the five. Exactly.
It might go down first, though. I don't know. This December is so crazy.
I've seen two predictions from pretty lofty people. One, that we're going to start out the year great and then sink. We're going to start out, and the other one thinks we're going to start out the year kind of crappy and then go up. So who knows? I mean, that's my outlook 2025, guys, which will be out hopefully right before Christmas. Essentially is taking a different perspective, which is really how to watch and gauge for yourself as opposed to make these great predictions of where the S&P is going. I think, believe it or not, that's pretty useless, futile tool to is it going to 7,000? Is it going to 5,000? Who cares? We'll know what it's going to do.
Right, right.
But
All right.
all
Well,
right.
that was a mouthful.
All right, well, thanks. And yeah, merry
Thank
happy.
you.
In case we
Yeah.
don't get together again next week.
And we will see you next week.
Okay. Bye.
Bye.